Okay, the news of the day is that ARK Invest and Cathie Wood have invested in NIO, and I'll get flooded like this in the comments that, well, people want to have my opinion on that. So let's do it. And while some of the earlier watchers of this channel may know this video that I have done 2 years ago, in which I basically pitched to ARK Invest that I think that NIO is very different to Tesla, and that basically ARK Invest should take a look at NIO and invest in them. So this is kind of putting me in this awkward position to doing this video now. Because frankly, and as a spoiler, I don't really understand why they invest in NIO. After I made the video on YouTube, basically giving a short introduction to NIO, making a pitch deck, and I was invited by one of the ARK analysts to join a phone call and basically speaking to them. Also, I'm very fortunate and I really appreciate it that I also had the opportunity to speak to Cathie Wood and more of the ARK Invest teams a couple of times. And well, the thing is that after speaking to them and exchanging views, I do understand why they haven't invested in NIO, and basically I got a better picture of how ARK Invest invests. Basically, what are their KPIs, what are they looking for, and while I think there's a great overlap between ARK Invest and their investment themes and NIO, and particularly when it comes to innovation, I do understand that their approach to investment is actually quite different to mine. For example, the analysts are very much focused on the topic of declining cost curves, right? This is why they are so bullish about Tesla, because Tesla is the king of manufacturing, the king of scale, and they have managed to pump out cars in the quickest manner. They are great at managing cost. And with this type of first principle thinking by Elon Musk in particular and Tesla in general, and this emphasis on investing in declining cost curves and technology leadership, well, I did understand why ARK Invest did really not pull the trigger for NIO until now, because whenever ARK Invest or Cathie Wood were publicly asked about NIO, I actually did get the sense that they are really not a fan of battery swapping, because they think that this is actually a less beneficial way of replenishing power, in terms of that supercharging will be the more cost-effective way of doing it. So once again, having cost at the very heart of what they care about when they're also doing their investments. And also, yeah, from an engineering perspective, don't see it as the right way to do. And ARK has been publicly critical about the engineering and R&D structure of NIO, in terms of that they do think NIO is receiving government benefits and needs those kind of subsidies in order to survive. And so I cannot really tell you what has possibly flipped or changed the mind. Another point why I don't really understand it is, for example, in the known formats that ARK Invest is posting on their YouTube channel, Cathie Wood was pretty worried about the situation in China when it comes to the whole Evergrande situation and the government crackdowns and those type of things, and she's been warning about investing in companies that are having higher margins, and NIO surely is fitting into that. So personally, I cannot say why this move. I'm really also kind of stunned and baffled by this move, and I cannot really explain it currently by now. I think we need to see how they are explaining themselves, in terms of maybe they're getting asked on CNBC next time. So what could it be? From my understanding, NIO really doesn't fit too well in their kind of investment style, and that's fair enough. I mean, NIO can also grow without an ARK Invest being invested in that company. However, what might be the case here is, first of all, it's listed in or invested in ARKQ, so that is the fund which is bundling investment in autonomous driving and also energy storage. And possibly this has to do now with some latest development with the NIO autonomous driving subscription model, which will be actually launched in Q4. And we all know that NIO has actually quite interesting personnel in this regard with Ren Xiaoqing, and so we'll see what this latest hardware can do with the software and those types of algorithms that have been developed in-house. So that might be one reason to take a look at NIO, and that also really fits into the ARK Invest portfolio, I would say. And the other one might be regarding energy storage. Maybe they have changed their minds a little bit about the topic of what battery swapping stations can do in a, let's say, not on a unit basis. Yes, they may still be quite expensive to build out. However, with those topics that are also lined out here on the channel about battery swap stations could, taking a role in the energy grid, right, for load balancing, and thereby enabling new business models in the area of power and energy trading, and thereby actually limiting some of the or mitigating some of the initial cost, and on a lifetime basis may actually be interesting to look at for also what types of revenues and profits that could generate in the future. Maybe they have taken a deeper look on that and actually come to the conclusion that it is an overall net positive effect. So that's the only way how I could explain that. Maybe more also of a tactical move. Let's say, ARK Invest, I would say, is currently underinvested in China, and we've seen some of the portfolio managers coming out and say, look, where do you find growth rates? Where do you find undervalued businesses? There are just some certain kind of businesses around, and well, of course, in China you have the additional risk, the geopolitical risk right now. You have the risk about delisting. On the other hand, it's in the same basket as many of the other invest names in terms of volatility and risk and growth. And you have actually even a second upside there. Like once there is the policy agreement between the US and China, that alone should give the valuations of this company a boost. Of course, it could also go the other way around and cut the valuations in another half. Who knows? But anyways, like if you're thinking from a portfolio managing perspective, you want some kind of exposure to China, and you also want, make this upside in case it happens, because overall we'll see that in case that growth is having a comeback, this will also be a comeback for Chinese names in general, but for the Chinese names in specific, you will have this additional boost of once the US and China hopefully normalize their relations again. And so it may be just, a very pragmatic move that is not falling in love with this company, not thinking this company is doing anything better than, let's say, Tesla or XPeng or BYD, which are other ARK investments, but just very tactical move and saying like, we want to participate in this upside. NIO is now valued at a very, very low valuation, as I'm always pointing out. So, you invest in bargains. And if that's the case, I think it makes kind of the point of that Cathie Wood is a out-of-the-box thinker and investor. And this is, in my humble opinion, what is a key ingredient to unlocking profits, returns that are ultimately beating the market. So who knows? That might be my only explanation. Other than that, it doesn't make much sense from what I gathered, how the team is assessing companies and how they are investing in companies. I would still kind of not get overexcited about that. We'll see like how much of a long-term move that is and how much of conviction is behind that. I would also, as Tesla is my biggest investment, I won't see this as a move away from Tesla by ARK Invest, certainly not. But these are my current thoughts about this. Let me know down in the comments how you think about that. I'm interested in reading about this. And anyways, very, very surprising move. Let's see what's happened next. And yeah, thank you guys for watching and see you in the next one.